Hey dreamers, I'm on a mission to level up my stock portfolio. I'm not looking to make drastic moves, I'm simply approaching optimization like a bonsai tree. A little snip here, letting it grow a little more there. So today, I wanted to show you the top 15 sells and buys I executed over the last couple of months to get me in a better position to do two things. One, generate more income so that one day I can be work optional. And two, weather a potential storm in 2022. In particular, in 2022, I want to move a little more towards a defensive position. As an expensive stock market, inflation, and future increases in interest rates make me think we'll have downward pressure on the market, even if a storm doesn't come. These are long-term holds that set me up well, regardless of what happens. Last month, if you recall, my optimizations resulted in my dividend income going from $4,603 to $7,618 in January alone. And in February, I'm also expecting a significant increase from the previous quarter, which I will review in just about a week. Now, as I review my sells and buys, keep in mind, we've had a rocky start to the year. Year to date, the Dow is down 6.85%, and the NASDAQ down 14.43%. Okay, so with that context in mind, let's go through the list of the stocks that I sold. So starting with JP Morgan. I sold JP Morgan at a stock price around $155, sold a total of $13,000, and now the stock price is $152, so I've avoided that $3 loss. Now, I know what you're thinking. JP Morgan, why wouldn't you hang on to that for the long term? I still have JP Morgan stock. I simply wanted to right size the amount that I have. You know, both JP Morgan and Target have payout ratios of 26, 27%. These are awesome stocks. I simply wanted to right size. I have a lot of financial stocks. I want to kind of take that down just a little bit. In some areas. So sold, went ahead and sold JP Morgan. I sold a little bit of Target at $208, about $8,000 worth, and the price is now $204. I sold Starbucks. I know what you're thinking. Why would you sell Starbucks? I'm buying Starbucks. Once again, I still have Starbucks stock. This is one of those stocks that it still is overvalued, and I just have to ask myself, do I want to remain flat or watch it, continue to be flat as we have issues in China, which is a huge growth market for them, and do I want to ride that flat for a while at a low dividend yield? So my answer was no, I wanted to take that position down just a little bit, and so I sold about $7,000 worth. The next one is a Vanguard product. It's one that I've held for a very long time, and just decided to take that one out of the mix, so I completely closed that one. APAM was one that I really didn't fully understand as a business, so I did actually close that position, sold at about $45. Now it's at $38.91. Rio is kind of another controversial one. This is a high yielder in materials and mining, and this is one that's actually gone up in price. I sold it at $71. It's now at $77, so difference of $6.48 in the stock price. But this is just one that I decided you have to pay foreign tax on it. It's also pays twice a year, and there were other options that I prefer to put my money into. The next one is Shopify. This one I sold at $1,052, and now it is at $656. So, a total of almost $400 difference in what I paid in the stock price. And this is one of those stocks where, for some of these growth stocks, it's not a matter of do I believe in the company or not. It's really a matter of why did the stock price go up so astronomically in the last 12 months? And is that something I really want to ride all the way down in the next 12 months? So my answer here was I didn't, and that's why I liquefied most of my shop shares. I hung on to one just to keep my foot in the door. Discover was one that I sold some. I still hold Discover. I love the stock. It's doubled in price for me, so it's been really great. But yet another financial one that I wanted to take down and just right size my financial holdings. I did liquefy my T Rowe blue chip growth, another one that I've held for a very long time. There's been some changes in who is actually in charge of that mutual fund. So I sold T Rowe blue chip at 178.79. It is now 148.23. So it's gone down over $30 a share. Couple of more mutual funds here that I sold. Fidelity Contra Fund, which I've had for a very long time, sold at 1881. It's now 1597. Sold some Vanguard Wellington at 48.45. Now it's at 45. And then here's some growth stocks that I just right-sized. I still hold some Salesforce. I still hold some PayPal, but I just, right-sized these. Sold CRM at 209. It's now at 196. Sold PayPal at 110. It's now at 103. I sold some Caterpillar. Again, I continue to hold Caterpillar, but I just right-sized this down a little bit. Sold it at 203. It's now at 191. And then lastly, this was a bond fund, Angel 3156, and it's now at 3073. Now, this does not mean I'm a genius, right? Because everything has gone down. Remember the context of the Dow being down and the NASDAQ being down. So the only thing that's kind of gone against the grain here is Rio. Not surprising, as people sometimes go to gold, they go to hard materials when there is a recession coming. So that's kind of gone the opposite way. Rio has, volatility in it. That's another reason why I wanted to take a little bit of the volatility out, up or down. But again, this does not mean I am a genius. What is going to be interesting is when I go through the buy tab here in a second, everything that I bought should be down, given that, how much everything is down. Now, I'm not going to go through all the fundamentals like I do in some of my other videos, but I do want to point out just a couple of things I'm seeing in some of these businesses that I truly love, I truly believe in, and I still own stock in. One is Starbucks. So you can see, just a beautiful, gorgeous growth here over the last 10 years. It just continues to go to the right and up. But then you see, just in the last 12 to 24 months, a very much sharper increase here. And that's the kind of thing I'm looking for, that I'm concerned about, is that all of a sudden this business, this entire corporation, is worth way more than it was at the height right before the pandemic. That to me says it's still, even though it's dropped, above the estimated size of the company before the pandemic. And that's where I start to get concerned that it's still overvalued, and it's still essentially pulled some of the growth forward from the future, and is already priced into that business. So now let's take a look at Target, a fantastic company that I love, and I still love the stock. But again, you can kind of see that all of a sudden it had a dramatic increase in stock price. And, in my mind, that means that this price up here is still dramatically overvalued, and likely needs to come down just a little bit more before it starts to normalize. And then you see just a shocking graph like Shopify. And you can see its previous values, and then just a meteoric rise. So I would not be surprised if Shopify comes back down to earth, and at that point, that it may be something that I invest in again. Okay, with all that said, let's get into what I bought. So starting with the biggest tranche, I bought $34,000 worth of BCE. I bought it at $50. It's now at 52. And once again, with the context of the Dow being down, the Nasdaq being down, you would expect that my purchases are all down. But you can kind of see here that is not the case, which tells me I'm on the right track, that these are going to be good defensive positions throughout the year. So BCE is my first purchase, followed by BTI, British American Tobacco. I bought $11,000 at $39. It's now at $46. That one just has started to rise tremendously. I bought Bank of Nova Scotia, about $8,000 worth there. I bought some more MO. I bought some more T, which I believe we're going to have about a 20% appreciation over the next 12 to 24 months. I bought about $5,000 worth of IBM, which has gone down $2.62 in the price since I purchased it. I bought some more AbbVie at $130 a share. It's now $144, about almost $3,800 worth of AbbVie, which has been a great stock for me. Monthly payer, ticker symbol O, which is Realty Income, bought at $70 a share. That's gone down a little bit to $66. I bought some Microsoft stock, about $3,000 worth of that. I bought $2,417 worth of Verizon. I started to add to AQN, which is a utility company in Canada, about $2,000 there. I purchased additional shares of Avgo, which is a chip maker, at 524 shares. That's now at $579 per share. Appreciated about $55. That was a good one. This is a new position, a new growth position, McKesson. Bought 1,374 shares there. Some additional shares in Pfizer, about $1,200 there. And then lastly, some TD, which is Toronto Dominion Bank up in Canada, $952 there. So all in, that represents about $93,400 of new position. Now, if you're interested in some of the reasons why and all of the fundamentals behind stocks like BCE and the Canadian bank stocks, you can see my video, My Favorite Canadian Dividend Stocks. And also, if you're interested in why I bought more MO, you can watch my video, High Yield SIN Stocks, or UK stocks for more information on BTI. But let me point out just a couple of reasons why I picked up some of the other stocks. For example, Microsoft. You can see here, and I don't have to explain much with Microsoft. I'm sure you guys know all about it, and you own it as well. But just a beautiful, smooth line up. There's none of that, outsized, crazy growth that we saw in the others. But then just a little bit of a decline here. So I really do think this is an opportunity to pick up some Microsoft shares before it continues to resume and go up into the direction it always does. IBM, I do believe this is a 10-year look that we are witnessing a turnaround finally. It's been a painful couple of decades for shareholders so far. But, with new leadership and new capabilities in AI, etc., I think we are actually witnessing a little bit of a turnaround here. So I'm excited about IBM. And a couple of stocks that I didn't buy yet, but I do have my eye on. One is T. Rowe. So this is one I own and I love. And you can see, once again, this kind of dramatic rise, outsized growth here, which isn't warranted, and then a steep decline. I'm not picking it up yet because I do think it has farther to fall, but this is one of the other ones that I will be keeping my eye on. In addition, Intel, they are getting ready to invest $20 billion into additional foundry capability in Arizona. And so I do think that Intel is going to be a good one to watch and potentially pick up in the near future here. And then lastly, IIPR, one of my favorites. It's a marijuana REIT. And you can see, once again, this kind of outsized growth, and it's fallen a little bit. So I'm going to keep my eye out there. So those are the biggest moves I've made so far this year and some of the other stocks I'm eyeing as we begin the year. These moves represent about 6% of my total portfolio, so it's a good example of the kind of tweaking I do once or twice a year. Still, I've found it's just as difficult, perhaps even more so, to sell as it is to buy, especially selling company stock you truly believe in. I'm curious what you're doing. Feel free to leave a comment on your strategy or goal for 2022, and I'll be sure to respond. But regardless of what you're doing, I'll leave you with a thought. Did you know that average returns for an above average period of time will put you in the top percentage of all investors? That's something to think about, especially if you believe this market will continue to cool. I hope you enjoyed this example of portfolio optimization. As always, I encourage you to keep learning, keep implementing, do your research, and then put it all into practice. As a reminder, I'm not a financial advisor, so keep in mind these videos are for entertainment and inspiration only. Stay tuned, and I'll see you on the flip side.